Hello and welcome to Wyckoff Training Academy. This is training session 2 of uh, Wyckoff training, Quadri's indicator based on Wyckoff method, which I have started yesterday, which is based on, one second, let me pull up my drawing tool. No, it's not coming up. Yes. So we would be discussing about 206 in some few points were untouched yesterday. So we're going to discuss about 206 and 208. Uh, in the coming session, I would be discussing detail about 208. So to begin with, yesterday we had seen, I talked about this 206 version, and had spoken about this using trade setup, price and volume, which is here, trade setup liquidity, which is over here, simple first pullback in both the ways. And after that, I've spoken about dynamic trend lines, minor trend line, and this is one thing which is remaining, that is support and resistance. And I've spoken about accumulation and distribution. There are two ways to trade accumulation and distribution. That is what I'm going to talk about in this today's session. And this would be a very small session, like more than 5 to 10, like in between 5 to 10 minutes. So first, I'll speak about support and resistance. So what is this support and resistance? Support and resistance are meant for those people who don't understand or who don't have like don't know how to identify a pullback, like identify um, swing highs and swing lows. So I have a different method of identifying it. Like for example, for some people this would be a swing high and swing low, then this would be a swing high and swing low, and so on accordingly. But I tend to draw a support and resistance line based on certain criteria which are automatically assessed, and based on that one, it is drawing support and resistance. So, what is the meaning of support and resistance? It is simple. Once again, let me hide 208 so that you people shouldn't get confused. It is represented by dots. Resistance is something which is represented by pink dots, and support is something which is represented by blue dots. So, what is the purpose and how to use it? Whenever a resistance is formed, we want price to get stopped at this particular point and it should come down. Whenever a support is formed, we expect price to stop here and then do the start an upward move from there onwards. So what happens if this resistance is being broken? It is now we are expecting it to get converted into support. Like for example, over here, this is a resistance. So what I'm expecting price to come back now, it has been broken. I'm expecting price to come back here and act at this resistance level, or this price level should act as a support and it should go up. So now normally there are many indicators in the market, like which have been developed by good coders, that correspond to like a break of structure or change of character, this and that. So even you can apply the same analogy with this one also. But what for me, what is important, if this is a level, I would pay attention at this particular level. Either if it breaks and then test it, then I would look for a pullback trade. If it is if it is breaking this one, I would look for a pullback trade. Simple as that. Now, in my tradings, like whatever, like in previous session as well, and in the sessions which I have recorded. So you people might be seeing that I always like to trade based on pullbacks, because if, for example, if this is a resistance, price is coming here. Let me do it in this way so that everyone understands it clearly. What is my way of trading? I simply, because if price is coming downwards and this is a support or either accumulation or either accumulation zone or any other thing or key zone which has been formed over here. So price is going upwards and then coming back. So I have I like to see the price failure to confirm my trade. Why is it so? Because when price is breaking down, it is confirmed for me that now the price trend is going to continue downwards. So I'm more into a kind of a trend continuation kind of a trader. But to some people, they might uh, want to catch a bottom or catch a top. So that would differ from person to person or from trader to trader. But I would rather love to see a continuation kind of trade because here my risk is minimum and reward. Let the market take care of my profits or my reward. I don't bother about how much points or how much 1:3, 1:5, 1:10, 1:20. I bother what I'm concerned about is how my reaction should be to the current trend which is presented to me by the market. So, for example, this is the best place for short sell. And if a price is progressing upwards, some people might like to see price getting rejected and catching a top and making it a home run of like 1:10. But that doesn't happen every time. Rather, what I believe and what I like to see is if there is a breakout, then I would love to see the continuation. And I would like look to buy over here with corresponding swing highs as much uh, targets or either the targets which are provided by my indicators or trailing stop loss is there on in the indicator so that it will keep you intact in the trade and you can ride the longer trades or ride the trend along with it. So this is how my all trading is all about. This is how I try to assess. So now and the other, second thing which happens with this one is like if this is a support and it is broken, that means it gives me a sign. Now the direction is clear to me that prices are about to go downwards. And if I see some price rejection over here, because I have introduced 155 version, I like to see my supply candle over here and my demand candle, absolute demand candle over here. So if I get first demand candle, I initiate the buy over here with my stop here, and then wait for the targets. Even if I'm getting 10 points, 20, I'm not talking in terms of pips. You can do the calculation at your end because it differs from broker to broker. If I get 10 points, I'm good with it. If I'm because I believe in taking I want market to be in my favor 90% of time. What profit it is yielding me, that is immaterial for me. Because if 90% of my trades are profitable, I don't, because over a period of time, I would make a good amount of money over a period of time. So coming back to this discussion, now with that analogy, if you see, I'm looking out for a buying opportunity. But now the thing is like, why I like to see first pullback because when the price is in a upward trend, it has an exhaustion point, and when the exhaustion point occurs, it has a tendency to either go for a corrective move or either there would be a complete shift in trend. So instead of getting into that kind of thing, I like to trade when there is a congestion taking place. For me, this is an accumulation. So when accumulation occurs, if I price goes up, then I like to see a zone form or either I like to see a distribution level which act as a jump across the tree for me. So it is simple. My trading is simple, and I advise everyone to make just trading simple and straightforward. Now, when it comes to counter trend trading, like for example, this is what is support and resistance is. So I hope, like for example, over here, this is a beautiful example. This was a selling move of some degree or a accumulation. If we see prices accumulating over here, this is the resistance. If I draw a line across this one, you can see if I would have bought over here and I would have placed my stop loss over here and waited for higher targets. If I book, this was the first resistance point. Once this target has been booked, I'm out of the trade. If you see, if you see how many points we are making over here, for example, that we should be in a position to 332 points in on an intraday. That means 332 points. You can do the calculation. You can multiply it 0.01 and then so on, so on. So making $1,000 or $10,000 in a month based on this strategy is not depending upon your investment. It's not a bit tough, but it gives you a key to avoid. So this is what support resistance is all about. Now, somebody is trying, we want to trade on accumulation and distribution. Okay. So for example, this is an accumulation. This is a distribution. If this is not the distribution, then it has to act as a jump across the creek. Okay. And if this is not a accumulation, then it has to act as a FTI, fall through the ice. Sorry, my bad. It has to act as a fall through the ice. So these are counter trend moves. Why counter trend? What is the trend? Underlying trend over here? Trend is down. So this is the counter trend move. So this minor accumulation and distribution level gives you an opportunity to trade either counter trend or with the trend. So as I mentioned earlier, what I'm a trend uh, continuation kind of a trader. I don't want to place my bet against a counter trend move. So rather, instead of buying over here, this may or may not. But here the risk is minimum. But the reward which it gives in a counter trend move, which is you're about to catch a bottom in the form of accumulation. So this is greater. So when you are planning to buy over here, everything is showing you selling. When you're planning to sell over here, everything is like if you're planning to trade it, if you're planning to so if this is what a counter trend move would look like. So here you're catching, or here, one second. Here you are catching, or here you are catching a counter trend move over here. So over a period of time, you would understand how to catch this counter trend move. For catching a counter trend move, this acts this version 208 helps in great detail. So what I like to see is if simple, like for example, we haven't got any trend continuation kind of a trade today in XAUUSD. If I see into Euro USD, have I got any trade? No. Here it acted as a, but price stalled over here, and then again price came back up above this level. So this is not and neither it acts as an accumulation, neither it acts as a trend continuation kind of a trade for a downward trend. So if I try over here in like JVPUSD, you can see neither it has acted as a trending move. Like I was expecting price to go downwards and then for short selling over here. Here, neither it acted as a buying move for me, for being taking into consideration the previous trend as a uptrend or price is going to go upwards. So not every day is going to make. Not I don't trade. I sit every day, but I don't like market to give me every time a better or trading opportunity. But rather, I love to wait for the trade to come to me. So this is the trading opportunity. If I extend over here, you can see this is a pullback. I short sell over here. This is my profit for sure. So now this is something which is I'm much more interested in rather than playing around over here or either over here or rather over here. So this is a trend continuation kind of a trade. Like for example, if you know what your trade setups are, if you're applying it on one or two markets, some market would give you some sort of trade. Before closing this session, I'll look into the Malaysian market for FCPO. One second, FCPO 5. So now here we got counter trend moves, but I don't trade counter trend moves because there is something which is different. Like here we got a trend continuation kind of a trade on a 5 minute. This is what I was talking about. This this is a I'm expecting price to come back and then tested over here. I would place my buy over here or either over here with the stop here. This would be my first target and so on if price is moving upwards. So this is how you have to trade based on this thing, and you have to choose your time frame according to your interest and your risk to reward and market movement. So thanks for watching this video and stay tuned for future trading sessions. And please make your trading simple and straightforward.